Good morning, good morning, good morning. Welcome to today's Morning Blast with myself and Mr. Brown. As usual, we'll be giving a review of yesterday's action in the markets and market-worthy events and a preview of today's market-moving news. Well, obviously not a preview of the news, but a preview of what's going to happen and hopefully put a bit of value into your day, maybe add a smile or two, definitely a bit of swearing. Again, as I said yesterday, more bar side than fireside chat. But before we get any further, I'll get the legals out of the way. Nothing discussed in this Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. Good morning, Mr. Michael Brown.
Very good morning to you, Ryan. Good morning, everyone. Very happy Wednesday, and I hope you're all buckled up and ready to go because there is an absolute deluge of potential event and headline risk on the
I am
horizon over the
strapped
next
in.
12 hours.
I'm strapped in and strapped on.
Oh, God. Oh, God.
Oh no.
Start as you mean to go on, I suppose.
Well,
Right?
exactly. And and this whole ambience changes when you realise that I woke up at Tom's house.
Oh, God. I mean, poor Tom is all I'm going to say to
Well,
that.
he's already left me to it. Not like that. Oh God.
Sorry,
Move on.
he's left you unattended in his house.
Yeah, I know.
God,
I know where the wine is.
he's more stupid than we thought.
Right. Enough
Sorry,
about
Thomas,
me.
if you're listening. Very good
He
morning
is.
to
I
you.
can see him. What's been occurring, my dear friend?
Yes, what has been occurring? Well, it was an interesting day yesterday. Sounds like it was an interesting day for you, Ryan, as well, but for slightly different reasons. For the financial markets, at least, we had an initial bout of positivity, which I'm sure you'll recall
Yeah.
us discussing on this space this time yesterday morning, but that rather fizzled out as the day progressed. I think market participants having a distinct lack of conviction yesterday, which really is not necessarily too surprising, given, as I alluded to a moment ago, the plethora of event risks that we've got on the horizon. Obviously, the Fed later on, jobs day on Friday, various tariff headlines in the mix, Megacap earnings as well. So despite having been up well over 0.5% intraday, the S&P 500 actually closed down by about 1/3 of 1% yesterday, snapping a 6-day winning run. And the Nasdaq 100 lost ground as well, closing down by around about 0.2%. And subsequently, we saw a little bit of a risk-off, cautious vibe dominating elsewhere as well, with gains seen across the Treasury curve, with 10 and 30-year yields falling around 10 basis points apiece. And the dollar consolidating its recent advance above the 50-day moving average, with the dollar index lingering around the 99 figure for the majority of the day, which in turn saw the euro trade down to around 115.5 and cable trade pretty much flat around 133.50. It must be said there wasn't anything by way of sort of specific catalyst for the gains to fizzle out yesterday, although we did have news from the US-China trade talks, which concluded in Stockholm late last night. A little bit odd, actually, to be completely honest with you, in terms of the readout from those talks, because we initially got a readout from the Chinese side, which said that the two negotiating teams had agreed to an extension of the current trade truce, only for Treasury Secretary Scott Bessent to then say, actually, they may have jumped the gun a little bit there, and that the decision on any extension to the current truce will be up to President Trump, and President Trump is due to make that call today after a briefing from both Bessent and US Trade Representative Jameson Greer. Both of those sound quite positive, noting that the tone of those talks was constructive. And that one option on the table is for a 90-day extension to the current truce. I would highly, highly expect that truce is indeed extended. I think this is potentially just another moment where Trump wants to be the man in the news and the man in the limelight, which is, of course, very, very unlike him, as opposed to there being any sort of severe risk of tariffs boomeranging back to the levels north of 100% that we saw in the middle of April. I don't think either side has any desire or really ability to stomach tariffs at those sort of levels. We did also hear from President Trump himself on this matter yesterday, who offered a statement that was as clear as mud on Air Force One as he flew back to the States, saying, and I quote, "I will either approve a China extension or not." So thanks for that, Donald. Really appreciate that. That clears absolutely everything up. Other than that, it was relatively quiet in terms of the issue of trade yesterday. Of course, fallout from the weekend US-EU trade deal continuing, all of the EU member states wanting to have their sort of two penneth worth in terms of their say on that deal. We did also hear...
Let's be quite frank, mate. All the member states want to tear the fucker up.
Well, yes, there is that as well. We also heard from White House economic advisor Kevin Hassett. Potentially this time next year, I'm going to be saying Fed Chair Kevin Hassett, which just makes me feel slightly queasy. Nevertheless, Hassett yesterday on Fox News, he was saying that a number of trade deals are very close. If I had a pound for every time he'd said that over the last 3 months, I'll give you a clue. I wouldn't be on this call right now. Hassett also said that those deals are just awaiting the tariff rate to be decided, which is kind of fucking important when it comes to these deals, pal. So don't get your hopes up on that one. Hassett just repeating all of the recent rhetoric. In terms of other bits and bobs from yesterday, away from the trade side of things, we did have some mixed data out of the United States. Job openings coming in below expectations in the month of June at 7.437 million, below the 7.5 million consensus and below the 7.769 million that we saw in the month of May. If you look at some of the details of the report, like the quits rate, though, this is really just kind of painting the same picture of the labour market that we're all already familiar with, one where the pace of hiring is relatively slow, but the pace of layoffs and quits is also relatively slow. This is a labour market that is still just kind of stuck and a bit frozen. It's not a labour market that is, crashing around us or anything that extreme. We also had the latest consumer confidence stats out of the States yesterday. The Conference Board's index, that rose to 97.2 in July, up for a prior 93. So better than expected confidence, softer than expected job openings, bit of a mixed bag. To be completely honest with you, doesn't really tell us anything new. Other than that, we also had a 7-year auction in the States yesterday, very solid 7-year auction, it must be said, which stopped through the when issued by 2.6 basis points. That wraps up this week's Treasury supply ahead of the quarterly refunding announcement, which we'll cover a little bit later on. In terms of other bits and bobs from yesterday, a few bits of corporate news worth mentioning. Following JP Morgan's move last week, Citi, they have announced that they are also going to extend their research coverage to private companies, unsurprisingly, focusing on tech and AI names. I think this is something that we're going to see more and more banks get into, to be completely honest, particularly as private markets begin to open up to a greater sort of spread or wealth of investors, and the access there becomes greater. I think banks are also going to try and provide an increasing amount of research coverage. Speaking of banks, and actually speaking of JP Morgan, they are apparently nearing a deal, according to Wall Street Journal, citing sources, to take over the running and management of Apple's credit card program. Of course, this is currently administered by Goldman Sachs. Goldman have been trying to get rid of it for a number of years now, and it looks like JP Morgan may be taking things over. Of course, under the Chase brand, JP Morgan very, very familiar with running credit card programs. Their Sapphire Rewards card is one of, if not the most successful programs in the United States. Besides that, a few other bits and bobs of corporate news. Novo Nordisk, who report earnings next week, they issued some rather glum guidance yesterday. They noted that they now see financial year sales growing by between 8 and 14%. That's a pretty chunky cut from the 13 to 21% that they'd foreseen previously. This drastic slashing, I suppose, in the sales guidance is all due to lower than expected sales of Wegovy in the United States. Wegovy is the weight loss injection for those who are unfamiliar. Novo Nordisk also appointing a new president and chief executive as a result of this to try and shake things up. Their shares fell as much as 28% yesterday, hitting their lowest level since February of 2022. Also dragging lower peers such as Eli Lilly, who are also involved in the weight loss drug space. And Eli Lilly also report earnings next week. So two things to keep an eye on there.
I think it's important to note that the reason for this isn't a case of a lack of demand for these weight loss drugs. It's just the sheer competition in the space now is diluting their market share.
Yeah, Novo had effectively
First mover
first mover
advantage. Yeah,
advantage,
exactly.
and now you've got Eli Lilly coming out with a similar sort of thing. You've got a few others on the market. I think some of the patents and protections they had for Wegovy have all these GPT-3 drugs or whatever they're
Yes.
called have expired, and as a result of that, as you say, more competition means that their sales are lower than expected. The demand
Uh,
is clearly still there.
Listeners, if you thought myself and Michael were at the deep end of the pool when it came to AI, when it comes to weight loss drugs, we're even, we are even less of a clue involved. But
Yeah, I think we should probably move on from that one because it's
yeah.
getting rapidly out of our ballpark. I think other bits and bobs of corporate news from yesterday. Just a few sort of select headlines. The railroad deal that we've been talking about for some time now. Union Pacific, they are going to be buying Norfolk Southern, forgive me, for $320 a share and some stock involved as well. It's a cash and stock deal. That's very much in line with expectations. Also in M&A, Palo Alto Networks, whoever the hell they are, they're apparently spending $20 billion to buy a company called CyberArk, who I've also never heard of. Apparently that deal could be finalized as soon as later this week. That is the Wall Street Journal, citing sources familiar. And lastly, and I'm going to get this right this time, Anthropic, who are the people who actually make Claude, who I'm not friends with at the moment, they are apparently going to be valued at $170 billion
Oh, is that
in a
all?
funding round led by Iconic. They are apparently going to try and raise as much as $5 billion in
Jeez.
that new funding round. So clearly there is absolutely no sign of this deluge of cash into the AI space slowing down anytime soon. Oh, and the other thing,
Go
just because it gives us a bit of a laugh, Taylor
on.
Wimpey missed expectations this
Hey.
morning. Their shares are down 6.2%. So if anyone's got any decent orders that need working on the book, now might be the time to get them filled.
Fuck you, Ben. Uh,
Poor old Ben. I
Poor
don't
old
want to
Ben.
fall out with anyone, but
No.
I will
Thank you.
in a big, big way.
Yeah, I'm gonna come down there and wring your fucking neck. Obviously put
If
some.
people have no idea what we're
Yeah, do you know what?
talking
I was just
about,
thinking
then
that.
go and look at our feeds because there's a very, very funny phone call to listen to at some stage.
I'll have to repost that straight after this. Michael, thank you for that. Let me rattle through some overnight news headlines, courtesy of our dear friend Zach Eisman and the Overnight News Roundup. Again, I know I always say it, but really do subscribe to the Substack. It is the best way to get up to date with all the overnight news, market moving news headlines. Starting off in macro space. Fed governors could break ranks as Trump intensifies Powell's pressure. That's according to the Fed whisperer, Wall Street Journal's Nick Timiraos. He notes possible dissents by Christopher Waller and Michelle Bowman would mark the first time in 3 decades that more than one Fed governor dissented at a policy meeting. Bloomberg are reporting following on kind of this vibe. Treasury traders trim bullish bond bets ahead of the Fed meeting. Sticking with the US, Trump administration is considering halting all wind development on federal land and in federal waters as the president expands his campaign against renewable energy sources.
He's really got it in for wind turbines at
He
the minute, hasn't he?
really has, and considering someone that has a lot of hot air coming out of him, you'd be surprised. See what I did there? Sticking with the Trump administration, they've said that they will rescind the long-standing finding that greenhouse gas emissions endanger human health, removing legal foundation for all US greenhouse gas regulations. What else we got? According to Bloomberg, yen option traders brace for more weakness ahead of the BOJ decision. China stocks, they're being pressured despite China's top leaders pledging to manage disorderly competition among enterprises and improve capacity management in key industries in the second half of the year. China will keep policy continuity, and stability while enhancing its flexibility, according to highlights of a meeting of the Politburo. The US dollar's narrowing premium over the yuan in the forwards market has dampened foreign interest in Chinese bonds. That's despite recent gains in Chinese currency. That's according to Reuters. Moving over to Germany, German retail sales, they rose more than expected in June, increasing by 1% compared with the previous month. That was against expectations of a 0.5% rise. So I wouldn't call it a comeback. We'll see what happens there. Australia, their inflation continued to ease in the second quarter, raising bets that the central bank will deliver its third interest rate cut next month. That's according to Wall Street Journal. Mexico, they're raising their import taxes on small online purchases from companies such as, the typical Chinese retailers such as Shein and Temu, etc. That's to avoid US tariffs. That's to avoid US tariffs that are going down to the wire. So this is blatantly a move that Mexico are doing at the behest of the US.
Mm.
South Korean won, that's outperformed its Asian peers after local media reported US demanded appreciation of the currency during a trade talk between the two countries. Taiwan media, they're speculating its US reciprocal tariff might be 15 to 20%. That's the consensus view. But one rumor of a higher 22% and a $500 billion investment that's going to be tagged onto the back of that. Obviously, Taiwan invests in the US. Other sources say the potential Section 232 tariff on semiconductors is more feared than overall tariffs, and the steel, copper and aluminium 50% tariff. There's also a threatened 200% tariff on pharmaceuticals. So plenty of plates spinning on the Taiwan-US trade deal to see where we land on all of that. Singapore's central bank that's kept monetary policy unchanged after easing in the last two meetings as the city-state continues to face risks from looming US tariffs. Moving over to Chile, their central bank cut its interest rate for the first time this year and kept its guidance for monetary policy easing in the coming quarters as a weak labour market crimps activity and inflation data slows. Sticking with South America, Brazilian beef exporters could face a $1 billion with a B dollar hit to sales in the second half of 2025. That's if President Donald Trump moves forward on Friday with a plan to impose 50% tariffs on the country's exports. That's according to a leading industry group in Brazil. Geopolitical news. The US has cancelled the meeting with Taiwan's defense minister in June, deepening concerns in Taipei that President Trump is wary of supporting the country in ways that could anger China. Those of you that should be remembering what happened over the weekend, and yesterday we announced it as well, that Trump has, basically banned the Taiwan Prime Minister from setting foot in the US when he kind of does his layovers or stopovers on his usual tour of Latin America and South America. And because of that, the Taiwan president has cancelled the whole trip. So definitely one to watch there. There'll be a few nervous people in Taiwan, and also the Democrats will be probably looking at this thinking, what the fuck's going on? Somaliland, they proclaimed independence from Somalia. Proclaimed independence from Somalia in 1991, is willing to offer the US a military base at the entrance to the Red Sea and critical mineral deals in a quest for international recognition as a sovereign state. Moving over to equities, LG Energy Solutions, they signed a $4.3 billion deal to supply Tesla with energy storage system batteries. That's according to a Reuters source. This is as the company looks to reduce reliance on Chinese imports due to tariffs. Mercedes-Benz, they've warned that annual revenue will be significantly lower than last year as tariff hits sales of its cars and vans. The chemical giant BASF said it expects demand for chemical products to grow less strongly than previously expected due to a deteriorating global economy. Porsche, they've cut their full-year profitability target after the EU's trade deal with Trump and reported a $400 million hit from tariffs in the first half. And finally for me, the luxury fashion firm Hermes, they've outpaced rivals with a 9% rise in quarterly sales, showing the continued appetite for rich shoppers of its coveted $10,000 handbags. The company said it raised prices by 7% globally this year, and an additional 5% in the US, where Hermes said that it would fully pass on effects of tariffs to the clients. I suppose when you're that rich, you don't really give a shit. And that's it for me. Back to you in the studio.
Good stuff. Thank you, Ryan. Right.
You're very welcome.
Where the hell do we start with today then? It is an absolute monster coming up today. Plenty of event risk to keep us all on our toes. Let's just crack through it in chronological order. I think that's probably the best way to do things. Starting off at 10 o'clock this morning, we have the first read on second quarter GDP out of the Eurozone. The economy is set to have stagnated on a quarter-on-quarter basis, a fairly significant slowdown from the 0.6% pace of growth that we saw in the first 3 months of the year. But this is almost all due to the effects of the tariff front-running that we saw in Q1 being unwound in Q2. The data is, of course, very, very noisy, and it provides little by way of signal as to where the Eurozone economy is likely to head in the second half of the year. Stateside, and moving into the afternoon at 1:15, we get the latest ADP employment data. The ADP figure is expected to show 75,000 private jobs having been added to the economy in July. That compares to the 33,000 jobs that the ADP indicator pointed to the economy having lost in June. Standing reminder, the ADP number bears little to no resemblance to the NFP print, and we really don't have time to have that debate over which one is more accurate right now.
Damn it.
Just going to get that in there ahead of you starting off again. At 1:30, 15 minutes after that, we have the first read on second quarter GDP out of the States. The US economy, that's expected to have grown by 2.5% on an annualized quarter-on-quarter basis in Q2. That would be a vast improvement on the 0.5% contraction that we saw in Q1. But this is the opposite of what we saw in the Eurozone and in the rest of the world, where tariff front-running was a drag on US growth in Q1 and is going to act as a boost to growth as that is unwound in the second quarter. So again, the data is very noisy, but you can bet your bottom dollar that that is going to be the biggest and bestest and hugest and most beautifulest GDP number that the world has ever seen. Also at 1:30 this afternoon, we have the Treasury's quarterly refunding announcement. The Treasury noting on Monday evening that they need to borrow $1.01 trillion of net marketable securities in the 3 months between July and September. At 1:30 this afternoon, they will tell us exactly how they're going to do that in terms of what the auction sizes are going to be across the Treasury curve. Focus will also fall on whether Treasury maintain their guidance that those auction sizes are set to remain unchanged for, quote, the next several quarters. Obviously, Besant has been talking about the potential to, and Trump actually, massively ramp up issuance at the front end and of T-bills. So that is one to watch very, very closely indeed. Moving into the remainder of the afternoon, at 2:45, we have a policy decision due from the Bank of Canada. The BOC expected to hold rates steady at 2.75%. The market pricing absolutely nothing for today and pricing around 18 basis points of easing by year end. The BOC will also be giving us their latest economic projections, which will obviously be shrouded in uncertainty, ahead of a potential 35% tariff on non-USMCA goods on Friday. And we'll also get a press conference from Governor Tiff Macklem after that decision as well. Then we get a little bit of a break until 7 o'clock London time this evening, 2 o'clock this afternoon on the east coast of the States, when it is, of course, the latest FOMC decision. As always, the decision and statement will drop at the top of the hour, followed by Fed Chair Powell's press conference around half an hour later. Rates are expected to remain unchanged, with the target range for the Fed funds rate set to be maintained between 4.25% and 4.5%. But as Ryan alluded to earlier, we are expecting that not to be a unanimous vote. Governor Chris Waller has been very vocal in his view that a 25 basis point cut is likely to be appropriate at this meeting, while Governor Bowman has also suggested that she may vote for such an outcome if inflation remains low. As Ryan said earlier on, if we do get both of those dissenting, it will be the first time in about 3 decades that 2 governors have dissented against the policy decision. Away from that vote split, the Fed should be a near complete non-event, to be completely honest with you. The policy statement is likely to be pretty much a carbon copy of that outlined in June, noting that the economy remains solid, that the labour market is also solid, and that inflation remains somewhat elevated, while the committee remain attentive to risks on both sides of their dual mandate. Fed Chair Powell's press conference, that's also likely to be a repeat of what he said last time out. Powell will stick firmly to his recent script, reiterating that the Fed are in wait-and-see mode with the economy remaining robust and resilient, and he certainly won't be drawn on any of the political nonsense or his own future, whether that be a potential resignation or whether he will stay as a governor after his term as Fed Chair expires next May. Frankly, Jay Powell has had, through no fault of his own, an absolutely horrible first half of the year, and I think he will be dying to get this press conference out of the way as quickly as possible so he can go and put his feet up on a beach somewhere and have a very, very well-deserved rest. This Fed meeting is very unlikely to be any sort of a game changer, and I think it's very unlikely that the Fed rock the boat before the summer
tell you
break.
What, you could literally ignore, go down the pub, come back. Well, obviously for the UK, it's a lot easier to do that. Go down the pub, come back and time it with the questions, because the questions are basically going to be the only entertainment for the whole afternoon.
Yeah, absolutely. Having said that, I do think that in terms of the really short-term knee-jerk move over the decision itself, the risks probably tilt marginally in a hawkish direction. The reason I say that is because, firstly, I think there's a decent chance that Bowman actually doesn't dissent in favour of a 25
Right.
basis
Yeah.
point cut. Secondly, the market at the moment pricing about a 2 in 3 chance of a September rate cut, and I think it's very, very unlikely that Powell is going to lean explicitly into such an action in his post-meeting press conference, which means we could see some of those positions unwound. But frankly, I think the base case is still that the Fed are just going to sit on the sidelines and wait and see what
Yeah.
happens for the time being. They're not going to act until they have more clarity, no matter what Trump or Besant or any of the other Muppets want to say. That is not all for today, though, because we do have plenty of earnings on the docket as well. Before the market open, we hear from Kraft Heinz, who of course make Ryan's favourite condiment. But after the market close is when earnings really ramp up. We hear from the magnificent 7 names Meta, who where options price an implied move of 7.5% in the stock after hours, and Microsoft, where options price a move of 4% in the aftermarket session. Also due to report after the close are some of the big semiconductor names such as Qualcomm, ARM Holdings, and Lam Research. So a very, very busy after hours earnings slate. I think it's going to impact the market more broadly, not only in terms of the index weightings that Meta and Microsoft have. I think they're the third and fourth biggest in the S&P and the Nasdaq. In terms of a read across to some of the other semiconductor names, we saw last week when Alphabet raised their FY CapEx guide, that gave Broadcom and Nvidia a bit of a boost after hours. You could see a similar thing if Meta and Microsoft also raise their guidance later on. But also in terms of sentiment, earnings season thus far has been very positive, frankly. Earnings growth has been at a decent clip. If we see any disappointments, then the market is likely to pounce on that relatively severely. And last, but by no means least, we may at some point today also get a decision on this US-China trade truce. Treasury Secretary Besant and Trade Rep Jameson Greer, they are due to be briefing President Trump at some point today on those talks that took place in Sweden. And at some point after that, Trump will be making a decision, probably via Truth Social, as to whether or not he wants to extend that trade truce. Again, expectations are that he will, but it ain't over until the fat lady or the orange man sings. So we will see what happens on that front. So very, 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 very busy day ahead.
Exactly that. You did tweet yesterday about the 90-day extension being likely, and as I pointed out, it's kind of, when they say history doesn't repeat but often rhymes. Obviously, the first term, every day it was the US-China trade deal was 90% done. At the moment, it feels like every day we're hearing that it's 90 days away. So we'll see what happens there. Just before we do go, whilst we've been on air, Nissan have reported its first quarterly profit loss in more than 4 years, and boy, what a loss. They've lost $534 million in April to June. So a bit of a stinker. And this is the reason I raise this is because myself and Michael have been mentioning Nissan on and off for the last, feels like a couple of months now, about how in danger they are and potentially merger or takeover could be in the line from Nissan because they're in a bit of a shitty position. Anyway, Michael Brown, thank you so much as always for being the absolute star you are. Listeners, thank you so much for tuning in. We really do appreciate you. Whatever you're doing today, keep it tight, stay safe, and we'll see you all tomorrow. Much love.
Indeed. Bye for now.
Bye for now.